Hey, what's talk a bit about in terms of stock market is about to crash. That's what the most consensus is. So let's really see what's going on with the stock market, right? So today we had this news from Morgan Stanley where a guy came in and talked about um, markets, right? Let's see the market commentary. Um, let's remove this damn thing. Market. Right. So today, this guy from Morgan Stanley came out and says the biggest sell-off since February is coming and is going to hit the average investor hard. Right now, let's look at the weight of the evidence. Right. I mean, in terms of things market to crash, I mean, he did talk about the market will drop further with tech and consumer stocks faring the worst and the weak earnings and so on. So we want to take a look at in terms of the whole market in general and see where the market is and is there really a weight of evidence, right? As technical analysts, we want to make the fact that everything is kind of already priced into the market, right? So we're looking at this weekly chart of S&P 500. What I have on here is these moving averages, which is short-term moving averages, and these are the long-term moving averages. So what I'm using right now over here is called Guppy moving average, right? So this is what is Guppy moving averages that I'm using. I'm using the short-term moving averages, 3, 5, 8, 10, 12, and so on, and the long-term moving averages, 30, 35, 40, 45, 50, 60, right? So what really tells me is if the red line on here is the long-term moving averages, right? The only way you can really see that the long-term moving averages, if they start, so these are long-term investors, these are short-term investors. So at this present time, I mean, if you take a look on this long-term moving investors, which is long-term moving average, you don't really see any crossovers to the downside, right? If there is no crossover to the downside, generally means the long-term investors, they are still happy to be invested on the long side. There's really no panic yet. In the future, there might be panic, but at present, that's not what we see on here. Because the other thing you want to take a look at is for something dramatic to happen, we need to have a relatively high RSI, right? Back in January of 2018, we had this RSI which went up all the way to 90, right? And that's when we had this big panic, right? We had this move, which is, and he has a big flush from 280 to 260. Now, even after this big flush, if you look on these long-term moving averages, I mean, they didn't really turn over, right? They are still pretty bullish, trending on the upside, and I mean the differences between the moving average is pretty high as well. So there is really no panic in the market. In the short term, you know what? There is panic. Went from 280 to 250 and so on. But on the long-term investors are not really that concerned. Now, the only way that this things can really unfold is if you look on the something like this, right? If something like this happens where the long-term investors, they started panicking. So after a down move, you actually see these. Let me zoom it in a bit more. So when the market is starting to fall over, you want to, if you see this kind of a convergence over here with these moving averages, means the long-term investors are now uh, panicking, right? These long-term investors, at least in the weekly time frame, they are panicking, and they don't really know what position they want to take, whether they want to go long or short, right? Chances are they want to be out of the market, so that's why you see this convergence, all these moving averages. Over time, when you see, zoom this out, right? Now, when things becomes a bit more steady, right? Now, when things becomes a bit more steady is when you see these moving averages over here, where you see this steady openness of these moving averages means even with this price dip, these moving averages are not rolling over, means there is some pent up demand on here, right? So that's why you see this after this dip, you still see it move up and so on, right? So right now we don't see the rolling over. And the other thing is, if you look at just on the based on price action, after this steep up move, what we are really seeing right now is, let's do this, right? So we had this up move from 180 to almost 280, right? So it moved up about 100 points since 2016. So nice 100-point up move. Now, of course, this is not really going to keep on running, right? There's always going to be a run, then a rest. So what we are seeing right now is some kind of consolidation over here. Right now, the only reason you would really want to have some panic buttons is so right now we are consolidating. Let's do this over here. Right. So right now we are consolidating just over this moving averages over here. Right. The only reason you would really want to hit panic buttons is, you know what, if it really goes down below these levels. Right. So if it goes below this level of 260 is when you really need to start hitting panic buttons of getting out. But at this present time, I mean, it's still holding on to um, this nice trend on here, right? So you really have no reason for it to go down. Plus the RSI is still at pretty low levels, right? For something kind of dramatic to happen, you need your RSI to really go super high. Right now, we are not even in the overbought territory, which is over 70. Now, taking a look at what happened in this, looking at the same moving averages, see what happened in, so we analyze what happened in 2015 when all of these started converging, means it was time to get out. The other thing you can take a look at is what happened in 2007 and 8, right? So let's take a look. So 2006, we still had this nice up move. Now 2007 and 8, right? This is where you start to see these moving averages kind of they start converging. When they start converging on the long time frame, it means things are really getting a bit shadier. So it means you really don't want to be involved on the long side, right? You either want to be either a short position or you want to be sitting in cash, right? So once you see these moving averages start converging, the long-term moving averages, those are the times when you should be sitting inside in cash or maybe short some positions, right? Depending on how you want to trade it. But you definitely don't want to be long once the long-term investors don't want to be involved in this name anymore. Once you see this long-term investors getting back into the game, which is nice movement, right? That's the time you want to be involved. So for this person to come out and say, hey, you know what, you might see a big market correction. I don't see a weight of evidence till now. Things can change. That's true, but at this present time, after this up move 100 points, and now we are going sideways close to about 40 points, right? If you take a look at this, it went from 180 to 280, so an up move of 100 points, and now we are consolidating between this 250 and 2, so about a 30-point range, right? So 100-point move, 30 points sideways is not really a panic button, right? So my theory really is, as long as we don't go below this 260 level, you want to be sitting on the long side. And yeah, there is no stock market crash that I foresee at this present based on these chart analysis. So if you like the video, do like and subscribe. Any questions, send me an email at swatchlist@gmail.com. Have a good one.